What's going on, everybody, and welcome to the video. It has been a long time since I posted on this channel if you're not new, but if you are new, welcome to the channel. I'm going to be my best to continue to be consistent and just continue making videos to help everybody make profits in the market. You know the name, market profits. But if you do enjoy this type of content, I ask you to subscribe to the channel and you turn on post notifications so you don't miss out on any of my future content. And in this video, we're going to be talking about a stock that I currently do own, and I plan on continuing to buy this stock just as time goes on, because I see a lot of upside potential. The stock is inmode, ticker inmd. Just looking at its past year performance, very well, up almost 31%. Year to date, up about 6%, and then over the past 5 years, 432% returns. Used to be about a $93 stock, until a lot of things happen. This is kind of whenever all those growth stocks just went incredible. But I want to talk to you guys a little bit more about this company and how I chose to value it and how you can get access to this kind of valuation method as well in the near future. But right now it has a market cap about $3.1 billion, a pretty high beta, about 2.07. PE is about 19, and its earnings per share is $1.89. And the 1 year target estimate from Yahoo Finance is about $46.60. Now let's go ahead and kind of talk about the main thing. Taking this relative valuation, a ton of different valuation methods to help us get a final intrinsic value on the stock. So I created this spreadsheet. If you want to get access to it, I'll find a way to get everybody access to this, like a Patreon or something like that. But let's just go over how it all works. So literally all you have to do is type in the ticker, and it'll give you the price, and it'll give you all these different things that you need to see. Automatically uploads. Like, I know this is ticker CNMD, but I'll just show you, for example, how easy this works. I could type in Apple, just give it a second, and everything loads, and now it's got all of Apple's information. But remember, it was CNMD, and that's the competitor that we're using. So we just kind of take all these different things. You take the averages of the competitors, you compare it to inmode, and what you get to see, it'll give you these numbers, the cash per share, all the things you need to do for the valuation of this company. And the price to cash per share, it is giving it an insanely high valuation on this. So this is something to be concerned about, just like keep wary of. Like, maybe you don't actually want to keep that in. So what you would do is, if you don't want, it actually should be I4 through I10. So I'm going to show you how easy it is to fix this stuff. But I don't want to put in the cash per share. So all I have to do, hit the comma, and right there, because that's a very high valuation on that company. Boom, implied upside about 155%. Just from these few valuations, looking at the PE, the price of sales, looking at its competitors, and comparing it to inmode. And then we're going to do a DCF valuation, a very simple way. You don't have to do a ton of research on this. It's very easy to do. Literally takes 5 minutes. But all you have to do is really type in the stock. It'll give you the beta, and then you can get the cost of equity using the CAPM model. We're going to just go with the AAA bonds kind of rate as their cost of debt, and then after-tax cost of debt about 3.54%. And it gives us the WACC. You just kind of have to type in how much equity they have. You can type these are in millions. So, and then the total capital, all that, the debt weighting, the equity weighting, and then you do it'll give you a formula. It's a very simple formula, but all you have to do is it manually does it, and you get the WACC, the weighted average cost of capital, is about 16.44%, which is a very high weighted average cost of capital. So I kind of did lower it a little bit to about 15% is the discount rate for this company, with a perpetual growth rate about 2.75%. And its average growth rate on its free cash flows have grown pretty well. I'm going to give it a 13% future growth rate, and then what it does is it takes the sum of all the PV of all the future cash flows and gets you that sum. You type in the cash and cash equivalent, the total debt that the company has. All this is in millions. You get the equity value, you type in the number of outstanding shares, and you get the DCF price per share, giving it about 6.57% upside from its current price. And then here's another thing, nothing that I'm really using to kind of give this stock a price target, just something that you can see. You can kind of take the EPS and give it maybe a future growth rate on what you want to see the company might be performing at. Like, maybe let's say it only goes to 8%. So here's what we got. You kind of just take the PE and it multiplies, or you take the EPS and it multiply with the PE, just to get a future expected price and things like this. So you can get a good estimate on how things will look for the company if it does continue to go well. Now, next up is the Graham's intrinsic value calculation. Something that I do actually like to use. You just kind of type in the growth rate estimate. You can find something like FinViz, the kind of 5-year EPS growth rate, compound annual growth rate. Just type in the ticker, the EPS will automatically come up. And all these other things are manually there. Like, you don't have to change them except for if it's highlighted in blue. But we can see, based off the old intrinsic value formula, it's got about 55% upside. Margin of safety is rating this a buy of 10% margin of safety. And then kind of with its right here, the modernized formula, it's saying to sell this stock. It's saying the intrinsic value is $30. The current price is $37. So there is a little bit of a difference in this, and maybe it is worth it to kind of sell this stock. So that's the grams formula. And then the last actual valuing method that we're going to be using is a financial metric intrinsic value. Very simple formula. Literally, you don't have to type in anything except for the stock ticker, and all this information will automatically populate, and it'll give you that intrinsic value based off of this formula right here. And it's saying there's about 14% upside based off of this alone. And then here's something that I like to do, kind of just like see maybe how the risk compares, because it is important to keep that risk analysis in your portfolio. You know, you don't just want to be having a portfolio of 10 stocks that are all so volatile and also likely to lose you money. So you want to be sure that everything's okay. I just kind of took some probabilities of how I think the economy will do, like the stock market per se. 5% chance that it's going to do very well, 85% is going to be pretty average, and a 10% chance it's going to be pretty poor. But looking at all these different things, how inmode maybe has historically performed when the stock market does very well, or when it does very average, or when it does very poor. Things like this. You kind of just take some estimates. You get your expected return that you might plan to see in your standard deviation, which is kind of the risk of the stock, how much it might move up or down from what you're kind of expecting. This is just a formula, though. It kind of tells you the range of where you might see the stock going. So this is how that works. And then lastly, to get the actual final value of the stock, we're going to be doing take these four. And for grams valuation, I actually take the average between both the old formula and the new formula to get that valuation for the stock. And here's all the different valuations. The final intrinsic value of the stock is said to be $55.54. With its current stock price, about $37.30. That's 48% upside. Then I wanted to give this stock a 20% margin of safety just to be a little bit more safer. Maybe I want to give it a 25% margin of safety. So I just type in 25, and it's still ready to buy. The upside / downside, but this is upside from the margin of safety, is roughly 11.67%, rating this stock a buy. So based off of this valuation, based off of these things, we are seeing some very good upside potential in this stock, but you might not even know what this company is. So just to give you a little bit of an overview, they're a leading global provider of innovative medical technologies. They develop, manufacture, and market devices. They do a ton of different things, kind of like almost plastic surgery with incredible technology. So here's kind of their products. They do incredible things. Treatments covered, women's wellness, technologies, minimally invasive face and neck treatments, body treatments, all these different things for people who want to maybe change the way they look or whatever it is. And they can use these products, which inmode has proven time after time of how successful and effective these are, that they're doing very well. Next up is they just kind of did announce revenue for the first quarter of 2023 to be in the range of about 105 to almost $106 million. Non-GAAP EPS is going to be about 50 to 51 cents, which is a pretty good number. Assuming that last year's $1.89 on this, we will be seeing EPS growth, which is a good thing to see. And then non-GAAP gross margin for the first quarter is in the range of 83 to 85%. Definitely a very, very solid number. Now, I know looking at it, you can see their quarterly revenues. Maybe it's a little bit less, but still, we are seeing really good numbers with this company. And the EPS right here, we can see the diluted EPS, still good numbers. We're in that range. We're up from the past quarter on EPS, but not necessarily on revenue, but we're still seeing really good things for this company. And I do believe the upside potential is definitely there. So if you did enjoy this video, make sure you subscribe to the channel and turn on post notifications so you don't miss out on any of my future content. Then again, check the links in the description down below for some free stocks and free money. Again, leave a comment below what you think about the stock, and I will see you at the next video.